Hello everyone, welcome back to another aerial effects video. And in this episode, I will be covering top-down analysis, one of the most crucial things that you need to understand in your trading. It doesn't matter if you trade smart money alongside us or if you trade any other strategy out there, you have to be able to do proper top-down analysis. Now, I get asked the question, what time frame do you trade from? That's probably one of the most popular questions that I get. And the true answer is I trade every time frame out there. Why? Because the market is fractal, meaning everything happens on every single time frame. For instance, I'm on the 1 hour time frame. So this is just a zoomed in representation of what's going on the higher time frames. On the opposite side of that, on the 1 hour time frame, it is a zoomed out version of what's going on the lower time frames. So it's the same exact thing, it's just zoomed in or zoomed out. So the real answer is there is no particular time frame that matters more than another. There is no particular time frame that you can be more profitable on than another. Because everything is the exact same. You just have to be able to zoom in and zoom out to be able to pinpoint these exact entries based upon, in this case, since we trade smart money, these institutional concepts. So I'm going to elevate your trading here in just one video. You are going to know exactly what you need to do step by step on how to properly do top-down analysis to further your trading. Okay, so make sure you have a pen and paper out, and we're going to get right into it because this is going to be a very informational video that I think will really transition and help you in your everyday trading to become just that more profitable. Okay, so first and foremost, what do we have to understand first? The trend. We go to the higher time frame. Start off on the daily time frame. Okay, you don't really need to go to the weekly or the monthly. I mean, that's not really something that you really need to pay attention to unless you're coming into a weekly or monthly time frame area of interest, right? And in this case, we're not. We're probably going to continue overall short, right? But we have probably some sort of pullback that we need to come into on a lower time frame, and I'll go over that here shortly. So first and foremost, daily time frame. Where are we going? Where's the trend? Where's the market headed? We're short. We need to be looking for shorts overall. Okay. Now we zoom in 4 hour time frame. What is going on in here? We're making lower lows, lower highs. Obviously, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Looking for a lower low altogether. Okay, so if we zoom in here, let's take a look at what is going on in current price. So we first have to understand in what direction we're trading. Okay, we're bearish. The market is bearish. We're pushing down, making lower lows and lower highs. Now we need to be able to zoom into price to figure out our entries, our areas of interest, and we can scale in even further for confirmations. Okay, so first and foremost, it's structure, like where we're heading. Higher time frame areas of interest is number 2. 3 is when price is pushing up or down, in this case, pushing up because we want to be looking for price to push up into our levels, right? Push up into our levels here, push up into our levels, okay? Push up or down, in this case, push up into our higher time frame levels of interest, scaling in and looking for these institutional concepts to confirm the reaction and the trade. It's really just as simple as that, guys. So many times people make it more complicated than it has to be because they really don't know what they're doing. Okay, it's really not that difficult when you're patient and you understand what you're supposed to be looking out for. All right, so let's go over what's going on in here, and we'll just continue as we go. Right, so in here, we're looking on the 4 hour time frame. We're going to scale in here in a minute, but we can see, we had a lower low, we had a pullback, lower high. We had a lower low, we had a lower high. We pulled back probably into supply, and then we had a lower low here. So how do we trade the pullback for a lower high, right? We're not looking to buy, right? We're looking to sell because we're in a bearish market. So understanding the higher time frame here, we are bearish, and we have broken structure making that lower low. Price is pulling back, making a lower high. Where could we potentially enter? Well, we have to first look at the counter trend. That's what I always like to do first. Pinpoint where the counter trend broke. High, low, high, low, high, low, high, low. We failed to make a higher high right here. We pulled back, reacted off the most recent demand level. Demand is simply just the swing points, right? Swing points, we had the reaction right in here, and then we made the lower low, and that's where we broke the counter trend structure to then start making lower lows, lower highs for the overall expansion push to the downside. Okay, so let's take a look and let's zoom in here. Let's go down to the 1 hour time frame. Now there's no specific time frame, guys. You just have to keep scaling in and scaling out to see what looks good, having the understanding of your overall levels. So again, on the lower time frame, higher high, higher low, higher high, higher low, lower high. We react off of a supply level and we start to push down. So you would expect a higher high, but we failed to make a higher high. We ended up making a lower low, shifting structure. Where was the most recent demand zone? Right here, right here, right here, and right here. Most recent demand zones we had a reaction from, but we failed to make a higher high in the sequence, and we rolled over and made a lower low. So in this case, the demand flips to supply. So now we're looking for pullbacks up into supply to then short, and we did not get that retracement. Oftentimes, what price will do is it will generate liquidity, relatively equal highs or equal lows, in this case equal highs, before pushing up into this level to mitigate our supply that once was demand. In the bullish market, now we're in the bearish market again. So higher and lower time frame, we are now bearish. Okay, higher time frame, obviously lower low, lower high, lower low. Lower time frame, lower low, lower high, and all that good stuff. So higher time frame and lower time frame were bearish. Now we're pulling back up into that higher time frame level. So we understand that this is supply. We start to generate liquidity. It's not only to take retail trader stop losses, but at the same time, it's used to free up liquidity in order for the banks to place their large contracts right at that level. They not only need to mitigate, but they need to retest this supply level, enter their short positions here. But how do they do that? How do they do that if there's not enough liquidity? Right? Because for every buyer in the market, there's a seller. That's how markets work. Right? You can't just place a billion, quadrillion standard lots here and expect to be filled and we just go short. That's not how the markets work. For every buyer, there has to be a seller. So there has to be enough liquidity on the other side of the market for people to be taking buys in here so that the institutions can take their short positions. Right? So they short the market off, but they need someone on the other side of the market to sell to, right? Or to buy from, excuse me. So they have to free up liquidity, meaning they attract retail trader shorts with these equal highs, they attract liquidity, and then they go and run it. Once they run the liquidity, what happens? If you're placing your stop loss above these highs, right up here, you're pretty much telling the market, okay, if price comes any higher, I want to get out of the market, let's say right here. I'm willing to buy back my position at that particular price because you sold it. Let's say you sold it in here. That means you sold it, let's say 8,240, let's just say, okay? Price comes back to the upside. You say, okay, at 8,260, I want to get out of the market because I think we're going to go long, right? Because it has broken retail resistance, all right? So you sold it in here at a lower price, right? But then you have to buy back your position at a higher price, hence the loss, right? So when you see on your MT4, MT5, you'll just see negative however much it is. You just think it's like a dollar amount, but in all reality, it's because you're forced to buy back your position at a higher price in which you originally sold it from, which accounts for that loss that you incurred, right? So when that happens, it frees up the liquidity so there's more and more volume able to be placed at that particular area, right? So now there's enough liquidity for them to place their huge contracts at that level. That is why smart money is the only real strategy in the market. There is no other real strategy that is actually applicable to how the market moves because the market is generated and is created based upon volume and liquidity, and that is it. No other, retail BS, Fibonacci's, or trend lines. There is no real way that money is actually transferred from a buyer to a seller if it's not liquidity or volume. It's facts, guys. It's not just my opinion. It's the true nature of the market. So if you understand how order flow works and how the markets are made, because that's why they're called market makers. They make the markets. They don't really trade them. They facilitate buys and sells between two different parties, right? But at the same time, they have to onload and offload their positions as well. So they do that by freeing up liquidity, aka taking retail traders' stop losses, mitigating orders, making the market efficient, and entering their positions in at the best possible price. Okay, because they're not going to want to get in down here. They want to get in at the best possible price. So they manipulate the market in order to do so. The markets are fully manipulated. All right. So now that we see this huge buy to sell, and then we make a lower low and we break the counter trend structure in here, we are now looking at making another lower low. So what do we need to do to get into the market short? So obviously you could have placed your short position right at that supply zone, which we identified. The buildup of liquidity with just more conviction, the conviction meaning we're going to go run it, free it up, and then drop, which is exactly what happened. But now we confirmed it by not only reacting from this level, but breaking the counter trend structure. So if this is what I say to beginner traders or beginner smart money traders. If you don't know that a level is going to be met, wait for the reaction or wait for some liquidity to be built up. There's liquidity in here, and there's obviously liquidity right here. Wait for the liquidity to be built up, or just have price come into your level of interest and then break the counter trend structure, right? Higher high, higher low, higher high, nope, lower low. So now we want to pull back into our supply level or sponsorship move, which is right in here, because that confirms the trade. We don't do that immediately, and that's okay because it can just generate more liquidity, and that's fine. And that's kind of what we want to see because we want to see that lower low form first. Lower low, lower high, lower low. Once we create that lower low, what do we expect to occur? A lower high. So we don't want price to come above this high now because that's just structure, right? Because technically, and this is on a technicality here, even though this is supply, and this is really where we should be pushing up into, technically this is the high that generated this lower low. So that is technically the range. So if price didn't make a lower low first down in here and we actually stopped like we did here and pulled back, I still would have sold it because I had a lot of conviction and a lot of confluence, but I couldn't be upset if price went like this first and then went short because it would be like a 1 drive pullback, 2 drive pullback, 3 drive into the high, maybe up into something up into here that's the lower time frame, but still maintaining the overall structure, right? Because this is technically a lower high compared to this high right here. Okay, so we have to understand that. Where is the actual structure? So in all reality, I would have taken that trade if we had a pullback from this level, just because of all the confluence that went with it. But it just gave me more conviction after we made the lower low, because now we're probably not going to come above this high because then that would be a break of structure to the upside, and we don't want to see that. Okay, so where is the sponsored move? Now, here's another question that a lot of people have. Well, isn't this the sponsored candle right here? Just because it's the last buy to sell candle. That doesn't make it the sponsor candle. Where was the volume actually influxed into the market? Where was the liquidity actually taken? It started right here. We can see the choppiness, buy, sell, buy, sell, buy, sell, and all of a sudden, boom, 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 boom. Very strong move. This is where the liquidity started to become taken, right? This is where the influx of orders began. Not here, not down here, not over here, and not up in the sky. Let's be realistic, guys. Where was the liquidity taken? It started to be influxed right after this sell candle here. Boom, 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 boom. Get in, mitigate, take liquidity, free it up, enter shorts, die. Strong reaction up, strong reaction down. Get in, get out. That's what they do. Okay. Why is this not the buy to sell candle? Because it's just a zoomed in version of the higher time frame thing. They're the same thing, right? It's just the 1 hour time frame candle. I bet you on the higher time frame, this is probably maybe one singular candle, making this the actual sponsored candle. But since we're zoomed in, you may think that this is the sponsored candle. But in all reality, it's just a zoomed in version of the actual big move. Okay. Now, if liquidity was generated right here, and we had liquidity, and then we had a 1 hour buy to sell, then yes, that would be the sponsored candle, right? But in this case, this is where the influx of orders began. That's the sponsored region or the sponsored move, a sponsored series of candles. Okay, sponsored meaning it was sponsored. What does the word sponsor mean? It means to provide or to give. You know, the institutions sponsored that move. They created that move. They allowed for that move, right? So now we know that that's the region of price in which we want to come to. Now we can zoom back out to our higher time frame and then wait for our pullback. So, you know, you probably could have traded in here once price broke structure and, you know, probably had some more buys. And the reason why you could have done that, if there was a setup, obviously, was because we have more room to go to the upside. We know that this is our overall level in which we need to come to. So any buying opportunities that you may have had, if you had all your confluences for buys, those would have been your take profits in here. And that's where you would have waited for your short opportunities. And you can see, let's just say we had a buy opportunity here. Did this high come into here? No, there's more room to go, which means we can still buy having the conviction that we have more room to go to the upside. Now, let's just say we did something like this. Would we look to buy a demand level in here? No, because we already came into objective. We need to now be looking for shorts. Hence why when we came into this level here, many people were probably trying to buy off the nearest demand or the imbalance, and guess what? They got screwed over because they don't understand the objectives and the higher time frame areas of interest. So we start off on the higher time frames, understanding where we're headed. Now we have a bias. Now we need to be looking for trades within that bias. Now we have our higher time frame areas of interest, right in here, right in here. Now we can scale into those areas of interest and find trades. So in here, when price comes up into this level, we can scale in. It doesn't have to be the 1 hour, it could be any time frame. But we scale into this and we can see distribution occurring within this level. Now, distribution is simply just offloading positions to then take the opposite position in the market to continue with the overall sells. So any buys that were occurred in here, they were offloaded. They were given to other traders to offload their orders to then continue with the overall direction of the market short. We distributed into this higher time frame level. We mitigated that buy to sell that mitigated this supply, that swept liquidity, right? It's all comes together. It's a piece of art, guys. So let's just say that you didn't know that this was distribution or where to enter. What do? Wait for the counter trend break, right? High, low, high, low, high, low, high, lower low. We closed below this level. So now what? Pull back, short. Simple as that. Now, where do you pull back and short into? Well, let's look at the counter trend within here. When we actually broke the structure, I'm on bar replay now. When we broke the structure and closed below this level, this is the last up move before we broke structure. Let's look at lower time frames in here and see where the counter trend was placed. So let's go to the 15-minute. Now, it doesn't have to be the 15-minute, just, you know, I just want to see the structure, guys. It doesn't have to be the 15-minute. So it's not just what I trade. You know, I trade every time frame. It's just, you get my point. I'm just trying to look at the counter trend. What do we have here? Higher high, higher low, higher high, higher low. Excuse me. Failed to make a higher high, lower low. This becomes our supply. All right, so I'm going to mark that off here. I'm going to mark this off. This is supply now. Okay. Why did we stop in here? Okay, let's go even further. What's the counter trend within here? Okay, it's the same thing, guys. That's why the markets are fractal. It's the same thing. So let's scale into like the 5-minute and see what's going on. Where's the counter trend here? Boom. Higher high, higher low, higher high, higher low, higher high, lower low. This now becomes your supply or your sponsored candle. We swept liquidity in here too, these equal highs. I'll just get rid of all the drawings now. We swept liquidity. These equal highs were taken. Boom, boom. So that was your sponsor candle. You could have taken it here. We actually pushed up a little bit higher into, I think, probably this last point of supply in here, right? We didn't quite hit it, but you get what I mean. This becomes your supply in the lower time frame. And then on the semi-higher time frame, this becomes your supply after we broke structure on the higher time frame. Let me just go back to it, right? This becomes your supply. Now, when we failed to make a higher high, we broke again and made a lower low. Now this becomes our supply. You guys get it? It's just you're zooming in and zooming out of the same exact pair, the same exact area of interest. Okay. So now when you say, oh, well, I only trade the 15-minute, I only trade the 1 hour. Okay, fine. I traded the 1 hour time frame. I just happened to be on the 1 hour when I saw it. 1 hour inefficiency, the last buy to sell, 1 hour. Okay. But I went down to the 15-minute and you could have traded this. But I went down to the 5-minute here and I could have traded this. Equal highs, buy to sell. It's the same concept, just zoomed in, zoomed out. So now you know that there's no true, real, best time frame, if you will, because everything occurs on every single time frame. It's just a zoomed in and zoomed out version of the exact same thing. Okay, so now that we have an understanding of that, I'm going to clear up some drawings so we can just make it look pretty again. Okay, so let's go back to the 1 hour time frame. So now that we know that the distribution is done, you could have had, trades in here all day long. But where I got in with my VIP members was after we made a lower low again. We confirmed it and we broke below the start of the distribution. We actually had two entries. One was right here. So it was just a higher time frame entry, obviously stop above the high. So we had our entry here. We got in, a little bit of drawdown, but on our second entry, you just zoom back out and it happens to be this. I don't know why it's not showing. Maybe it was a different pair I'm thinking of. But anyways, really this supply level in here. 4 hour supply, but you can go back down to the 1 hour time frame, and we can see that this is where we broke structure right in here. We pulled back, failed to make that higher high and lower low, so just the open of this last buying volume to short. So two, one there, and then one there. So we sent this out to VIP, perfect entry. Okay, so now we know that we're bearish. And obviously now we're higher time frame and lower time frame bearish. So now we can be looking for lower time frame shorts in already our higher time frame overall direction to make a lower low, because that's ultimately what we want within this whole entire structure. You know how many trades you could have taken? You could have taken one here, so pretty much one there. You could have taken probably two or three in here, another one here, and then we're going to go down and get some more. Guys, you don't need that many pairs to make money. You don't need that many trades to make money. You just need high risk to reward, high probable trades. That will easily get you to where you want to be and help you pass challenges if that's what you want to do. That's why so many people don't pass challenges, because they're impatient. They don't know what they're looking for. They don't know how to do top-down analysis. They don't have a clear understanding of the concepts that they're actually trading to begin with. And they want the instant gratification. They want to pass all the challenges right up front, not having to put in the work or experience. Guys, what I'm telling you is not to be a hard ass. It's to give you the problems, the same exact problems that I went through when I first started. Everything I just said, I was that person. I wanted to make $1 million overnight. I didn't want to wait to learn. I wanted to get that funding challenge passed. I wanted to start making money instantly. I didn't care about, having my rules or risk management in place. I didn't care about all that stuff. But I learned the hard way from it. And now I'm trying to teach you guys what you need to do to eliminate that possibility from happening in your trading. Okay. It's all about taking the advice of people who are currently doing it or have done it before and implementing it into your own. And I'm not saying you have to. I'm just saying that the people who have been doing it through our program have seen tremendous success. And it all just comes down to listening. Listen and apply it. Okay. So we had the entry here, sent that out in VIP on the 16th, I believe. Yep, 16th. Okay. Now what we can do is once we have that buy to sell, we make a lower low again. Now we can just continue with the overall structure of the market here, right? So now we're looking for just pullbacks to short, because now we know we're higher and lower time frame bearish. So I just kind of zoom in, see what's going on. And on the 15-minute time frame, we can see that huge buy to sell. Huge buy to sell. And what I'm looking for is the counter trend here again. Now you could have, this is the sponsor candle, right? Because this is the influx of orders. You could have tried to take it here, but it didn't quite pull back and hit it. So unfortunately, you wouldn't have gotten in, but we didn't get in on this one either. But I look at also the counter trend as well. We had, the higher high, the higher low. We started to pull back, to make a higher high. Obviously, we weren't going to do that because we already came into objective, but then we fell. So this creates the last buying volume in this supply zone. So my two levels for this were just this wick, so the start of the buying volume before the sell-off, and then the intermediate, like lower time frame, like buying volume to sell off there. So that's why I had two levels. But anyways, we've made a lower low, so that's where we wanted to pull back up into. But we didn't do that and we made a lower low, right? But what's going on in here that's so interesting? Okay, so now we have the higher time frame objective or the higher time frame bias short. Now where's the higher time frame objective? So before I get into this really fast, again, I have to practice what I preach here. Where's the higher time frame objective? Meaning, where are we headed? Where's the overall level in which we're going? Okay, so now we are looking at making a lower low. So where are we going to push down into? And this is where it comes down to looking at the higher time frame. And if there's nothing to look over to the left, because this is like decades ago, well, 1 decade ago, so it's probably not highly probable that we're going to hit some exact level. But what we can simply do is understand that if we are to go long, we probably want to, make a lower low first in the sequence and then maybe blast up, make a higher high. That's if we go long. And I'm not saying we're going to, but we need to figure out areas in which we need to be taking profit. So that's going to be, in my opinion, about 7-9, because there's really nothing to play off of over to the left that would probably induce a reaction to go long. But to take out this low, take out liquidity, make a lower low, that psychological level 7-900, that's probably where we're coming into. So that will be our overall take profit. Okay, so I just wanted to go over that very quickly. And that's where we are holding our take profit from our entry short here. So now going down to a lower time frame, I'm actually going to go to the 15-minute on this one. It just makes it look prettier. So in here, when we were trading, we were looking for that pullback back up into our areas of interest. And obviously, we didn't get it, but we can see what's going on in here. This is where time and price comes in. Time and price goes everywhere, right? Everywhere. You have to understand time and price in any situation and every setup that occurs. But this presents a really good example of what I mean by time and price. So this is Asian session. This is the whole Asian session. We're just chopping around, chopping around, chopping around. When we start London session, 2:33 in the morning Eastern Standard Time. This is the beginning of London session open. We have manipulative push to the downside, enticing the breakout traders from the Asian low. Okay, we push back to the upside, taking their stop losses, enticing the breakout traders for the Asian high. Because why? Let's see what the psychology behind a trader says. Oh, we're consolidating. London session, oh, we break out. We're going to enter short because we're going to go low for the rest of the session because we broke out. Nope, right back to the upside. I hit my stop loss. Now they're like, oh, well, it faked me out here. Faked me out. Now we're going to push up for the rest of the session. So it was a false break. Now we're going to go long because we broke out of the Asian range. High. Nope. Right back to the downside and make a lower low. So this becomes the institutionally sponsored buying volume to sell off. So really, my entry was just at the open of this buying volume to sell off. And I had another entry on the lower time frame. And I'll show you in a minute. That's exactly where we had that entry, perfect wick entry, 0.8085. That's why we get these wick entries, because we know exactly where we need to be entering. But anyways, let's say this. Higher high, higher low, just like we had in here, right? Failed to make a higher high, and then made a lower low overall. So this becomes our lower time frame supply level. So that's why we had 2 entries here, one here and one here. We got the first one to fill, and then we made a lower low. So, now we just leave this one. Oh, well, at least we got into the market. Okay, now we have our sell from this level. Price is down here now. We've made a lower low. Okay, so now that we have done this, high, low, higher, high, higher, low, higher, high, lower low, we had the reaction from our level. Now we can be looking to expect pullbacks to short, right? Knowing that this is now the structure, lower low, lower high, lower low, to continue with the overall direction of trend. Okay. What gave me more conviction for shorts here was the fact that we had relatively equal lows. We got in, that was the draw on liquidity. We were attracted to that liquidity next, hence getting me in profit. We create more liquidity, right? And I was hoping that this generation of liquidity would be that run, that buy to sell into my lower time frame supply. So again, when we have our huge buy to sell into our objective, we start to fall, we reprice ourselves, and we continue. Let's look at the counter trend here. Now, there's really no counter trend here because it's just straight buying volume. What we can see is that big, huge buy to sell failed to make a higher high, and that's where we started the lower low sequence. So this becomes our new supply level. Okay, so that's what I was hoping to get back up into, but we missed it by a fraction of a pip. But still, very, very precise level in which we fell from. Okay. Then we made a low, we pulled back, made a lower low. What's interesting about what's going on in here is that this is a lower low, this is a lower high, but this is not a lower low. These are equal lows. So technically, this is not a lower high. This is the lower low that was formed. So technically, we can be making a lower high there because this is the high that produced this low, right? But this wasn't this was a pullback, but until we made a lower low, right? This was the high that created this overall lower low. We never made the lower low here. So we can't consider this a pullback really into structure and then lower time frame like that. We can't really consider it like that. We finally made the lower low here. We broke below that low. So now technically we can pull back anywhere between this high and this low and still maintain our structure. Lower low, we can pull back, make a lower high and lower low. Okay, so that was the premise for our trade that happened today. And now we just got hit out break even, and that's okay because we swept equal highs, and now we can probably take it off of a supply zone in here, which I'll go over in a minute. Okay, so now we have our overall objective is 7.9. We're still going short. We still have to move short. Higher time frame, we're in a bearish market. Higher time frame, this is our swing point. Pull back, lower low, lower high. We're looking at making a lower low. Okay, so now we can scale in for future shorting opportunities. So one was here. However, could we potentially counter trend by this? You can counter trend for two things. One, you have more room to go to the upside. And two, all the confluences are there for a counter trend trade. So when price broke out, right, this was the counter trend. Low, high, low. When we made this higher high, it does not mean that we are bullish now because we're overall bearish. So how do we confirm the difference between an actual initial break of structure pullback long and understanding that we need the second drive first to then have to take it off the third drive? Well, it all comes down to our overall structure. If we were bullish, if we were going like this, and then we pulled back and made a higher high, we broke structure again, then we can expect a pullback to go long because we're overall bullish. But if we're overall bearish, if we take out the high, it could easily just be a higher time frame pullback for then an overall lower low because we kind of came into structure there. I'll just get rid of this so we can see it better. We came into prior structure there. So could this just be a overall pullback and it looks like we broke the structure, but in all reality, we just had an overall pullback into a higher time frame level for an overall short? That could have easily happened. So I had to wait. I had to be patient. So I saw equal lows forming, and then we created equal highs. We sold off into demand. I didn't buy it there because we could have easily just made a lower low, right? Because we could have just stopped from that level and made the lower low. So I waited. Did we get the reaction? We did, and it happened to be off of this level of demand. We filled in balance. We trickled our last selling volume, so this area of demand, and then we made the higher high. So essentially, we made a higher high, but we failed to make a lower low here. We made a lower high, okay, and then a higher low, right? A higher low, and then we made a higher high. So now we can confirm that we are in this pullback phase. And now we can be looking for buy opportunities to take it up into our higher time frame objective, right? Or really our lower time frame objective for continuation short, but this is really just a lower time frame trend, if that makes sense. Okay, so this is the top-down analysis I'm talking about, guys, right? So now we understand that this is demand, right? One drive, pullback, two drive, pullback. This is our demand level. This is our swing point. If we pull back, we're going to be in discount. We generate equal highs, we generate equal lows. I love this because now we are generating liquidity so that we can come and take it, sell to buy into our demand to mitigate, sweep the liquidity, come into that level, and then blast off and make a high, targeting these equal highs as that objective or as that draw on liquidity. Okay, so it's exactly what we had this morning. We sold into our level, had a great trade. Right when we closed above this high, I took some partials. Move stop to break even, because at that point, if we go short, we're just going to go short, most likely. So we can see, because of the fact that they were equal highs, and we pushed up and immediately had a reaction, and now we're falling again, could this technically be a run on liquidity, buy to sell and make a lower low? It could, because we are overall bearish. We have to understand that we may not pull back up into objective. And sometimes we don't. Oftentimes we will, which is why, that's why, we can't really be scared when this happens because our objective has not been met yet. But we can't take it for 100% certainty because technically lower low, lower high, lower low, lower high could just be a lower low. I mean, in all reality, this is a 61, 71% retracement. We are in premium price and we could easily be shorting off because we are overall bearish. Not all the time will we actually come up into our objective. But that's what we were aiming for because that's where we wanted to sell it and that's where we wanted to take profit on our buys. Nonetheless, once we broke the structure to the upside again here, we closed above it and we started to push back down. I took some partials, moved stop to break even, and yes, I did get broken even, right? Because let's just say now that we, swing point here, swing point here, swing point here, and now we break structure. Now we know that this can become our level of supply that we pull back up into and look for further shorts for the overall lower low, lower high, lower low, lower high, lower low. All right, guys, so this is how we can understand structure. This is how we can understand top-down analysis in our trades. All right. So hopefully you guys learned something here. Please send me a message if you're confused about anything, and I will definitely help you the best that I can. And obviously, from our VIP members this morning, guys, congrats on the big buy opportunity. Obviously, you should have probably taken partials. If you didn't take partials, at least move stop to break even so you didn't lose anything because we did break the counter trend. So at that point, that was our rule to move stop to break even. But hopefully you did take partials like me. Did make a little money, not as much as I hoped. We didn't because we didn't push up into here. But nonetheless, still a great trade, and the analysis was there, so we had to be confident in it. So guys, still continue to hold the trade from here. We still are in this trade here. Continue to hold the 7.9 and continue to hold the trade from not at 81.96 down to 7.9 as well. We are in massive profit on both of these. So congrats to those VIP members who have been taking advantage of these setups that we send every single solitary day. And we all are we're talking about, I would say, not all of the setups, but most of them, or at least a lot of them, on the live session. So guys, be sure to tune into our live session Sundays at 2 p.m. Eastern and Wednesdays at 8 a.m. Eastern time. That's when we hold our live session. So as long as you just pay attention and mark off these levels with us, you're going to be making money. Even if you don't want to confirm the trades yourself, if you just want to take them, how they are and how we present them, you can still be making a buttload of money. As long as you have common sense, you're using good risk management, and understanding that leaving this huge thing to come back all the way to the downside without moving stop to break even or taking partials is pretty dumb. You need to be doing that. So that's the common sense I'm talking about. All right. So guys, if you're interested in learning how we do this every day, every single day, sending it to our members, but learning how to do it for yourself so that you can get funded, become that full-time trader that you know you want to be, and have the understanding to where you don't have to sit in front of the charts for 12 hours a day trying to figure out what's going on. We make the concepts very simple. We break down these complex, sophisticated concepts into very simplified and a simplified understanding as to how you can go about implementing them into your everyday trading. Now, this stuff is sort of on a broad level, right? There's a lot more that goes into it. If you want to learn the nitty-gritty details and really escalate your trading, guys, head over to our website, www.arielfxtrading.com, and book a free call with us. The reason why we have these free calls is, we don't want you to go and purchase our products and services on our website directly. We don't want that because it may not be the right fit for you, right? We want to make sure that your mentality is the same as ours, right? That you want to do this as a full-time, not just as a hobby, because you can't really do trading as a hobby because it's either you're all in or you're not at all. So if you're not all in doing this, trying to trade professionally, then you're just going to continue to lose because you're not putting in the time and effort because it's a hobby, right? So we want to make sure your mentality is there. We also want to look at your goals. Where do you want to be? And then we formulate an individualized plan specifically for you to help you reach those goals individually, whether that be a six-figure funded trader, a full-time trader, wanting to help your family with finances, whatever it may be. We develop a trading plan and a plan specifically for you to be involved in our program so that it will take about 6 to 12 months for you to become, at any level of experience you are, to become exactly where we are as full-time traders today, having the understanding that we have. So that's our overall goal, guys. That's what we want to do for you. So if we want to speak with you first just to make sure that everything is up to par and that, we can actually help you. And if we can, then we would definitely extend that invitation to join. So guys, thank you guys so much. Have a great rest of your day. and enjoy your weekend. Holiday weekend, Labor Day coming up. So all you guys in the States who are celebrating, enjoy your long weekend. Have a great day and cheers.